Hi there, it's Bill with Smart Trades, and it's March 11th around noon Pacific time, a little less than an hour before the close. I'm going to do a review of some uh, counts I have of the Dow and the S&P, and as well as the dollar and so on. Anyway, first up, looking at a Dow daily, and the scenario that I'm looking at here is the possibility that the recent decline is corrective and is perhaps a fourth wave with a fifth wave to come. It's a little bit of a convoluted internal count when you try to count within waves 1, 2, and 3. In particular, 3 is kind of a mess. But assuming some running corrections and so on and so forth, and a relatively short third and fifth wave in 3, it can be done without breaking any Elliott wave rules. And at any rate, here it is. It's just a 1, 2, 3, 4, or possibly A of 4, in which case the rally we're in right now is B. We're going to come back down one more time to near the February lows for C of 4, and then off to a new high for the move. Time will tell. I still would be cautious here, and short term I'm bearish regardless, but there is a possibility we're going to see a fairly decent rally from these levels if we can hold on near the lows from February, or if we put in a corrective decline off of the current high. But we'll take that one step at a time, as always. Here's a bit of a longer term point of view, and looking at the Dow Jones Industrials monthly chart. And first off, we've got a fairly simple looking count if you just look at the A down, B up, and then 5 waves down of C. A lot of folks, a very famous market forecaster is calling for Dow 400. It's interesting because I was just looking at Robert Prechter's book, The Elliott Wave Principle, and one of his quotes from the it's actually page 38 of the broad concept, and I quote, "Wave C in any flat generally terminates at or just below the end of wave A rather than significantly below." Well, obviously we've terminated in this particular count just below wave A, and again, that's textbook according to Robert Prechter, Elliott wave theory. Also, additionally, in his book, under ratio analysis on page 107, he says, wave C is related by the Fibonacci ratio, usually 1.618, to the length of wave A. Well, right at this point of the close of wave C down on the lows, C is related approximately 1.618 to wave A. So again, right out of Prechter's own text, we have a textbook, if you will, relationship between A and C and a possible termination. That said, it could be a much larger ABC. Let's look at the long-term picture. And here we have again our ABC to the March of 2009 lows. That, however, can be counted as ABC of A. Indeed, I favor that scenario. If that's the case, we're just in A of B back up. We've got B back down, C up, and then a much larger C wave down to the trend line from the 1932 lows. That also coincides with some old targets that I have that come in around the 5,700 to 6,000 area in the Dow. This is kind of far out, to say the least. It's that trend line crosses that area of support around 5,600, 6,000 out around 2017. So time will tell. It's going to be a while, but anyway, the short-term implication is that perhaps we've actually got some upside to do to carve out a larger B wave before we go down to that level in the coming years. Getting back to the near-term future. Here's the S&P 130-minute, and one possible count here, we have possible ABC down, and then if you count this mess in here as a running correction, we have one up, ABC 2, 3, 4, no overlap, and then we have a wave 5 extended and subdividing in and of itself into 5 waves up, which is classic. Here's my favorite count, however, is that we have an ABC down, and we'll count that as A, an ABC back up, we'll count that as B, and as a practical matter, they both should terminate right near the old highs around 1150. One other factor that to me favors the probability that we're actually going to go through those highs eventually is the NASDAQ has already done so. The NASDAQ has already taken out the January highs with a fair amount of conviction. That said, and just backing up a bit here, looking at the advanced decline line, we've got a pretty severe bearish breadth divergences, and well, that's bearish. So short term, I think we are getting very close to a peak, but longer term, intermediate term, I think there is potential for a significant up move, but we'll play it one step at a time again. Going down to the very short term, here's a 15-minute S&P futures. This chart is a bit dated. I printed it up just a few minutes ago. We've actually rallied from here, and in this case we have a clear contracting triangle. Triangles are typical of fourth waves, and that fits like a glove with our count on that 130-minute chart. Here's the spiders, same thing. Again, nice contracting triangle, and it looks like we're breaking out as I write or speak. And speaking of fourth wave triangles, the dollar index is starting to show some very nice definition in a correction that so far has taken on the form of a triangle. That would be nice because in terms of specificity in the count, having a triangle here would pretty much ensure that indeed we've got a 1, 2, 3 triangle wave 4. If we break out of that triangle, that would produce wave 5 of 1. And then we'd probably get a correction back into the 78 to 80 area. But it would almost ensure that the low is at the bottom is in the dollar, and that in fact we've got an impulse wave to the upside, and much more to come. Gold still trapped in a trading range, and again the decline looks corrective so far. We haven't broken above B, so it's not conclusive, but I favor that indeed this decline off the highs is corrective, and eventually we're going to go up and perhaps test 1250. Crude oil is more of the same there as well. We're trapped in that trading range, and I think we're going to go test the top of that trend channel, but again, time will tell. And finally, here's Google. Google has retraced just about 61.8% of its recent decline. So far, the rally does not look all that corrective. In fact, it probably best counts as an impulse up. So far be it from me to say to short Google here, but it's an interesting juncture to watch it. It is right at a target. It has filled a gap, and we'll see. But interesting that it hasn't made a new high yet, and if it doesn't, I still favor that we're going to see another leg down below this low back in March, below 520. Anyway, that's it for now. Hopefully that all made sense and wasn't too choppy. Thanks for watching, and have a great day.